Hey everybody, what's going on? It's James here with Crypto Common Sense, and I wanted to sit down and shoot a video today following up the video that I posted yesterday. So first off, the video that I posted yesterday was actually shot on the 18th or 19th of October, so it was shot before this move over the last 24 hours or 36 hours, whatever it's been. But I wanted to post it because somebody in the Discord had asked, what my thought process was on Bitcoin. It had been a while since I talked about it, so that's the reason I went ahead and posted it. I hadn't had a chance to edit it, but then I sat down yesterday and edited the video and uploaded it. I'm sick, so if I sound a little weird or a little wonky, that's why. Not sure if I got bronchitis or the flu or what, but I wanted to at least try to follow that video up real quickly with another thought. I don't think everybody is on an objective level with Bitcoin. So let me kind of talk about this real quick. When I posted this video, the last video, we were way down here still, and we've moved up to this level. And in that video, I said that if we can close above this level, that it would make me lean toward the idea that this was actually depression and not anger. I still feel that way. I still feel like if we take this out, it's dangerous to consider this anger, and we have to be very careful about being overly bearish. But one of the other things I said in that video was I'm not so sure that 69,000 isn't the true all-time high for Bitcoin, and I wonder if it will struggle to take that out even if we have another bull run. There's a few reasons for that, but let me break down the main reason, okay? U.S. traders, people like me, have essentially been shut out of the market in a lot of ways. We don't have access to the overseas sites that a lot of us use to trade. Those are the sites that have the, manageable fees. They're still ridiculous, but they're manageable, at least the 0.06% type of stuff. Now we're forced to use sites like Coinbase and Kraken and Binance US, and even the cheapest of those, I believe, is 0.1% fee, which is just crazy. So that's a problem, right? That's going to affect trading volume. But the other thing, and the bigger problem, is the US sites do not offer leverage. You can't go to Coinbase and take 100x long. You can't go to Kraken and take 100x long. You can't go to Binance US, take 100x long. And so a lot of the euphoria phases of Bitcoin have been driven, especially the last cycle, they were driven by, I'm trying to think of a nice term, so let's just be polite, and people who had a gambling mentality, people who were risking money that they couldn't afford to lose, and in a lot of cases, people who were using ridiculous amounts of leverage trying to get rich quick. Okay. So that allowed a lot of buying to happen from people who otherwise would not have money to buy Bitcoin or anywhere near as much Bitcoin as what they bought. Those are things that I believe are going to affect the market cycle going forward, because the volume, I'm not saying that the U.S. is the only people that trade crypto. That's a very arrogant viewpoint. But the U.S. does make up a considerable portion of the overall volume in the crypto markets. And when you shut out an entire country, that's a big deal. And I know some other countries, I haven't kept up with it all that close, but I know the UK had started cracking down on a lot of this stuff as well. And so you won't have near as many people that have the access to those big, crazy leverage accounts and those, lower fees and this next market cycle. So I think that's going to hurt volume, which is going to, in turn, hurt liquidity, and not having access to that leverage could play a big role in limiting how high Bitcoin can actually go, because you need people FOMOing in, and a lot of people that FOMO in at all-time highs are people who are using 100x leverage to do so. So we'll see. The counterpoint to that is this. If we start seeing several ETFs get approved, especially if they are spot ETFs, we may see a lot of people get involved with cryptocurrency who otherwise would not have gotten involved with cryptocurrency. And it may be that just that volume from that new demographic outweighs the loss of leverage, but it's going to be something that I think we really will just have to wait and see. I don't think there's any way to say for sure what the outcome will be just yet. Okay. I'm not bearish on Bitcoin. I'm neutral. I'm not bullish or bearish. I'm just neutral. Like I said in the last video, I'm kind of an interested observer at this point. I have the small portfolio that I'm going to be holding long term. We'll probably pass it down to my daughter at some point. But, as far as rushing in to buy more crypto, I don't plan on doing that even if it drops super low. So that's, I don't have any motivation for it to drop. And I don't have a lot of motivation for it to go sky high because I don't have a lot of it to begin with. So hopefully that helps me to have a little bit more objective viewpoint than some of the other people out there. We'll see. All right. Again, I feel pretty crappy today, so I don't want to do a long video. I just want to do this and kind of share my thoughts on that. I hope you enjoyed it. And as always, please remember, I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed this video, make sure to give it a thumbs up and subscribe to the channel. Also, make sure to leave me a comment and check the description. There's a link down there where you can join my Facebook group. I post there more often than I do on YouTube. This is James with Crypto Common Sense, reminding everyone to please trade safe. I'll talk to you soon.